Today is Wednesday, December 28th, 2016. There are 2 trading days remaining in the year. And I will start, as I have been for most of these videos, with the NDX butterfly in January. And today, this butterfly has been closed. So I decided to close this thing at $100 with the remaining spread. And I will show you what has transpired over the last couple of days. So this is a 15-minute chart down here. You can see yesterday morning, we had a big gap and a really spiky rally there in the first 30 minutes. And that is when that spread was trading around almost to $110, which, as I was saying, I really should have closed this position somewhere in here, but I didn't. And then got a little bit lucky. We got quite a bit lucky with the late sell-off into the close yesterday. And so this morning we had a little bit of a spike up again, started to make a little bit of a rally, took out that high. I had a really close eye on this, and then it reversed pretty quickly and came down here. So I was willing to let this position ride a little bit longer. Then we got this move up, and that spread was trading around 98-ish, something 98, 99, and 100. It's just a round number. It's an arbitrary number, but I decided to make 100 my number. And as it rallied back up and through here, it hit 100. So I put in my order, and it filled. And of course, the rest of the day it declined some more, but interestingly, because in this decline the volatility started to pick up, it really didn't. The price didn't change that much from 100. I think maybe it was in the 99 area. But that brings up 2 points. Number one, I took this position, and this is going to be a loss, and that's okay. That's part of my plan. It's not a big deal. So number one, some people, after they experience a losing trade or a losing position, they then, let's say if they have a fairly detailed trading plan with a set of rules, we think of it as a flow chart, they'll try to go modify their plan. And so, for example, on this position, I put it on, and immediately the NDX rallied. And so they might say, okay, so why did I lose? I lost because of a strong rally. So let's go in, step 2, paragraph A, we'll make a subsection C, and then we'll say if it rallies, X% on day 1, then do this. And then they'll have another trade that loses. Okay, now let's go add in a sub 3 thing. And they'll just create this really convoluted mess of a trading system with the intention or purpose that it will never ever lose again ever, because I've factored in every possible potential thing that could ever go wrong, and it's all in my trading plan, and this is going to be perfect. That's a fool's errand, and that is the path to ruin. But I've seen it happen. I've seen it happen many times. I've seen an entire group of traders obsessed with those sorts of additional subdivision of a trading plan and nuanced little details of how they could possibly defend against every eventuality. And there's value and necessity to define risk and to manage risk and to plan ahead of what could go wrong. But to get to the detail of trying to account for every possible eventuality so that you will never ever have to take a losing trade, that's nonsense. That's a big waste of time. So I have no feelings of anger or regret or any of those, no negative emotions attached to the fact that this trade lost. And then another analogy I like to think of is I'm a sports fan. Think of a basketball team. It could be any sport, but I like basketball because you have 5 players, and a lot of times I have maybe 5 positions. And so if you think from the terms of the coach or the owner of the team, I really don't care who scores the points in a particular game. Some game your leading scorer might score 30, and some games he might score 20. One crazy night he might score 50. I don't really care who's scoring the points as long as the team's winning. And so I look at it from that point of view. So, maybe this NDX butterfly has been one of my better players. Has been one of my better performers. They had a bad game. So he had a bad game. Does that mean I'm going to stop trading this trade and never do it again because I lost money? No, that's ridiculous. That's silly. If I become convinced that this strategy no longer works, then sure, I will take actions. But, one losing trade is not going to make me stop doing this. The other thing to consider, other than the fact that you don't have to go after a loss and try to perfect your plan and try to prevent the loss happening again, is aside, other than the possibility that you are a brand new trader, or at least new to this style of trading, and you want to leave a position. So let's say you close this position off, but you just want to keep all the simulated trades in here and then watch it for the next few days, or maybe even all the way to expiration, just to see what would happen, see how it would work. I mean, I can see some benefit, that there could be some value for you to undertake that exercise. But anyone that is at least more experienced and has a plan and has a process in place, I don't see any benefit to continue to watch a trade. I mean, once you close your trade, you're done, and you just, if you continue to watch it, you can just coulda, shoulda, woulda, and torture yourself and recriminate why you made your decision. And I mean, there's some value into double checking, did I make a good decision? Is the process of decision making good? But just watching this the next day, and let's say it was down at 90 tomorrow. I was like, oh, I could have made another $1,000. I knew I should have stayed in. Blah blah blah. Let's go look at the chart and figure out why, how I could have figured out what was going to happen. I think all that's a massive waste of time. So I am going to delete this positions just to verify one more time. That is my final P&L on this position, and I'm going to delete the simulated trades, and I am never going to think about that position again, probably. So it is gone. So I will now focus on February. So yeah, uncheck January, look at February. So that is all that remains for me on NDX. And we got a little bit of selling today, so we lost a little bit of money, primarily on the volatility increase, and a little bit because we had long deltas, but it's primarily because I'm short Vega, and today volatility increased, I lost money on Vega, which is not a big deal, because eventually this is going to come out. And if we come down here, if we really start to get some selling and a good volatility pop, I would be very interested in selling more puts. And so in that instance, we get down here a little bit, volatility increases, and we get a rally back up, volatility will come right back out, and anything I lost today on Vega, I'll make right back when the volatility creeps back down, assuming that happens. We obviously could just go into a really prolonged downtrend, and volatility could increase, and I might have to fight this position on the downside. Certainly could happen. Next is Russell. And so Russell today it was down quite a bit. Again, I'm not sure why the platform, I don't know when it changes, but Russell again was not flat. It was down quite a bit today, which actually was very, very healthy for this position, even though, again, this is interesting. So I think, on the graph, we would have made at least a couple $100, but we only made 75, and that is because the volatility increased. So I made money on direction, but I lost on volatility, which is why so many of us who trade these sorts of trades, strangles and iron condors and such, butterflies, we like to be in this sort of position where we have some negative deltas almost all the time, because when you get a sell-off, you're riding up the top of this hill, and you're making money that way as the market declines. But when the volatility increases, you can think of this entire purple line as dropping. So even though I'm riding up this hill, the entire hill is declining. So net, what I'm losing on volatility on the Vega, I'm making up for on my short deltas. And so that's why so many of us like to be short delta traders, not crazy short delta traders, but primarily most of the time short delta. Unless the market is just in a crazy bullish rally, then that is just a recipe for disaster, as I can attest. But for the most part, we like to be over on this edge of the graph, just because that eliminates a little bit of the pain if you start to get a downside move. And so once again, same thing. Maybe even if the Russell trades down to this area, well, it starts to get down on this steep slope, I definitely will be watching it really closely and anxious. I really wouldn't want to give up too much more of this profit. I mean, 1,200 is not terrible. That's not so bad. But if it could, it's possible it could get over here, maybe test me a little bit, but then it rallies back up, volatility drops right back out, and then we could be in this place, in another handful of days and up, 1,500 or so. So nothing to take off right now. I do have some orders in on these two little customized condors, asymmetrical condors, to take this off in 2 pieces. And so nothing else to do there. SPX. Let's look at January 1st, make sure that's the only thing checked. And I had this really wide view of SPX, so let's rearrange it a little bit. Okay, we've gone from the right side of this hill over to the left side. And so now we picked up some long deltas. We lost money primarily on Vega again, but also maybe we lost a little bit on Delta. So again, this is not a terrible position. 2250 is not a terrible number. I don't mind having some long deltas at this point. Obviously, I can be proved wrong at any time, and maybe this really does start to pick up some steam on the downside. And since this is January and there are only a couple of weeks left, is it a couple of weeks or 3 weeks? 3 weeks. There are 3 weeks left. But as I've said before, I'm traveling soon, so I really have no intention of trying to be in for the last 3 weeks. In fact, I'd be very happy to get out of this next week. So yeah, if this really starts to look ugly over here, I don't anticipate defending this very much. So what I would probably do, in fact this is what I will do, is I will just start closing these put spreads. So maybe we could just do one at a time, or maybe I would do two, just to start to reduce this delta and theta ratio, and just keep this thing as we go down, just keep it near the top of the hill. If we kept moving down, just keep it over in this area, and then it sort of rally back and volatility comes out, the entire purple line shifts up, and then I would take some money out. That's the plan. So I will keep an eye on that spread, and then I will keep an eye on this spread declining, and then we'll just we'll take some profits here, hopefully in the next few days. For February, nothing to do again. Now this, you can see, this has been this back ratio, which has a bullish bias where we don't mind if it goes up to infinity. That's where I haven't do anything. Trading in a sideways range is great. Down a little bit's okay. But as you can see, because of we have a very, very long delta position here. It's a bullish position and it's short Vega. So today we lost on direction and we lost on a volatility increase. So we gave up almost a third of the profits that we'd had. So this position took a hit today. But is that a big deal? No, not in the scheme of the overall long plan of this position. Now, is this a big deal if this is day one of a multi-day sharp decline? Well, then yeah. But even though this looks like, oh my gosh, you gave up a third of your whole profit here in one day, that's not great. But this is the way this trade could work. So I'm certainly nowhere close to doing anything. The only thing I would consider maybe doing now that there's some topping action looks like it could be happening is maybe I would be adventurous and try to sell a call against this market. But I really don't want to at this point, because this position with February has 50 days remaining. I absolutely would hold this through my vacation, because this will be super, super simple to manage. I can just do this on the phone. And the only other little thing that could be uncomfortable is the fact that this 10 lot of 1975, it was really, really close to filling. Order was at 45, so now it's up to 75, but I think it was even price marking at 50 or 55, so it was pretty close. So man, wouldn't that have been great? Wouldn't that have been great if that filled at 45 and then immediately we got a decline, and then I could have maybe even sold some more puts? That would have been great, but it didn't happen. So yeah, nothing really to do there. Let's look at gold. Gold, I think we actually had an order fill today. So let me reset everything here, get rid of that. So these are my fill positions. Yep. So that's the NASDAQ trade from earlier. And then I bought in one of the strangles on gold. So this is how our gold position is looking now. So not so shabby. And that is an accurate P&L. So as I detailed earlier, this position started, I did a whole video just on this position. This was a bullish position, or a bullish trade, a bullish thesis that 1200 would hold and we would rally back up, which was absolutely wrong on the second day after I put this on. And gold had just cranked all the way down, almost relentlessly. I think the low somewhere in the 1120s. But with some fairly aggressive rolling and selling some calls against this thing, we have been able to eke out a decent profit. And then bought in the strangle, which took even more of the position off, so there really isn't that much remaining. Let's hide our simulations and see what's left. I have two naked calls, or I'm sorry, naked puts, one at 1100 and one at 1080. So I have two naked puts down here. I have a naked call at 1180 here, and then this 6 lot of call spread. Then again, this is in my good to cancel orders, and it's up to 90 cents, and it was down, I swear I think I saw it at 60. So it didn't quite get, so close to filling at my 40 cent hopeful good to cancel order, but it is really, really close. So those calls are pretty close to coming off. Now we've got a little bit of rally up, so that's taking some pressure off these puts, adding some pressure to this 1180. And so this is pretty darn simple to manage. Just take these puts off, take this call off. I'm sure I can do it as another strangle, so I'll show you how that works. I control clicked, you could shift click. So I just clicked here on the 1180 call, control click on the 1100 put, and I can analyze a closing trade, which is just buy this strangle in, and then show, oh yeah. So if I hide the position and go back to just the simulated trades, this strangle would take off. Look what that does. So that just reduces tons and tons of risk and actually takes out pretty much most of the profit that's remaining, which this is a pretty good indication that there's not much juice left in this call, and there's not that much juice left in these puts. So I should be looking to close these. And what's left, the meat of this position, is this 1180 and 1100. The short 1180 call and the short 1100 put. This is where most of the credit remains in this position, which makes sense. Those are the two closest to the money. Those have the most premium in them. And so then here's a decent decision point. Do I want to try to stay in and hope gold stays in this range and get more of this juice, or would I rather just close out of this, close out of these, take my profit, $3,000, not a bad number, offsets that NASDAQ position, and just move on along. And so here we're up about 3,000. I have a potential of 4760 credit, so there's not that much more we can. There's another realistically, because I won't take it to expiration, of course. Probably could get another 1,000 out of this, 500 or 600 certainly. So yeah, there's still some reason to remain. But if gold is going to do a big V bottom reversal and start heading all the way back up into this range, I do not want to slide down this slope and give up $1,000. So yeah, I'll be keeping a closer eye on this tomorrow, and maybe just closing this one out as well, and flatting a lot of my positions and having a lot of stuff in cash, and being able to enjoy vacation and not really have to look at the phone that much and worry about monitoring any positions, and just enjoy a little time with the family. That sounds pretty lovely. It'd be nice to have a break. So those are my plans for the rest of this year and then the first week of 2017. And in the next few days, I will record. First, I'll need to think about it and make some notes, and then record a review of 2016, which is quite a story. And I think and hope it could be educational, insightful for, I guess a new or experienced trader, but especially a new trader or someone who is not really certain of how these sorts of trades work and is interested. I think the story of my 2016, I think it'll obviously show you what can go bad, and that this isn't all sunshine and rainbows and lollipops. So I think that could be very, very helpful. So it might be a little bit of painful for me to go through all the lows and then a few highs and more lows, but I think it would be very informative. And so I will endeavor to put together some notes so I don't lose my train of thought and make it a little bit shorter than some of my other videos, because I tend to ramble and get sidetracked. So I'll try to be a little more focused, because I'm sure I could talk for quite a bit of time on 2016. So that will be coming up in the near future. Thank you for watching. Hope you are gearing up for a wonderful new year.